Okay, very good afternoon here on the 7th of August 2020. It's Rishi Patel, co-founder, Master of the Markets, the Elite Trades Conference and the Trades Open Day. Welcome to this update by way of market update, which we do at the end of every week here at Master of the Markets. I want to talk about two different ways you can use the moving average. But before I talk about two different ways you can use the moving average, I want to talk about the two different types of moving average that are available in essence. So what I want to do is I want to show you the two different types that are actually available. So if we look at the different types of moving average, you can see simple, exponential, smooth, linear weighted. And the two most popular out of the list is simple and exponential. A lot of people ask me what the difference is between the two. Quite simply, the difference between the two is that for the simple moving average, let's call it SMA for short. The simple moving average, the SMA, what it does is it takes the average of 20 close prices, if you're using the 20 SMA. It takes the close price of 20 bars. So let's say you've got something like 20 plus 50 plus 70 plus 10 plus 80 plus etc. all the way 20 times. Divide that number by 20. And the answer to that will give you the SMA. It will tell you where the simple moving average is as of that bar. Right? But the EMA, the exponential moving average, what it does is it gives more weight to the most recent price action. So if the recent price action has suddenly started to spike up, for example, then your EMA will actually give more weight to that, and it will start to the gradient will start to become steeper, because the EMA actually gives more weight to the most recent price, whereas the SMA doesn't really do that. It doesn't catch up that quickly. And it takes a longer time to catch up, so it's a little bit more lagging. So the EMA is a little bit more accurate in terms of what's happened on the most recent price, but what one you use will depend on the objective or the outcome that you want to achieve. All of the Master of the Market strategies use the exponential moving average. Now, with that said, two different ways in which you can use the moving average. So on the lift-off 3.1, we use or a lift-off 3.2 now, I should say, we use the moving average as a means of determining trend. Okay, so for example, if the 20 moving average is above the 50 period and the 100 period, you could look at it as an upward trend, right? You could look at it as an upward trend. And some people also ask why we use the moving averages that we do. Well, if we look at a chart where we have a set of moving averages, let's take this euro dollar as an example. Well, you've got the 20 moving average here, 20 exponential moving average here on the daily, or the 100. And you've got the 50. And you've got the 20 just here. So the 20, the 50, and the 100. So some people ask, first of all, why we use these particular moving averages. Well, if you think about it, let's think about it this way. So a 20 moving average on a daily chart basically means we've got the average of 20 days. Okay, so 20 days is the equivalent of 4 weeks, because 5 trading days in a week. So 4 weeks, and 4 weeks is also obviously 1 month, right? Roughly speaking. So 4 weeks is roughly speaking is 1 month. So this moving average, what it's doing, roughly speaking, is giving you a month's worth of average price data, right, at a glance. Then let's look at the 100. The 100 is a good one as well. Why do we use the 100 on the daily chart? Well, again, 100 days, okay, is the equivalent of, this time, is the equivalent of 20 weeks. Because remember, 5 trading days in a week. So we've got 20 weeks here. So 20 weeks is also telling you that this 100 period moving average is actually telling you the 20 EMA on a weekly chart, right? So this 100 period moving average on the daily chart is actually the 20 moving average on a weekly chart. So what you're seeing here on the daily chart at a glance is not only the 20 EMA for the daily, but also the 20 EMA for the weekly chart as well. So you're seeing the trend over 2 different time frames as at a glance on one single chart, right? I don't need to switch across to the weekly to see the 20 moving average. I can see it here on the 100 moving average on the daily chart. So this is one different way you can use the moving averages. You can use it to determine trend, across multiple time frames and use that as a way of making decisions in terms of which way you want to operate your trade opportunities, right? So again, everything that we're giving you here is a quantified means of measure. You can use this to quantify the market, and that's very important just there. So you can use this across any time frame. You can use principles across any time frame you want as well. You just need to work out what it would be on the different time frame, and then you would put the relevant moving average in for that. So you could use it on a 4-hour chart, and you could determine the trend of a daily chart. You just need to do the numbers the way that I've done here, right? And then you'd be able to use different moving averages on one single time frame to determine trend on different time frames, right? It's quite clever. So one other way in which you can use the moving averages as well is by means of understanding where potential turning points are setting up. And what I mean by that is that often people will stack stop losses under moving averages. So people that want to take a trade long, for example, maybe people that are in this long move at the moment will be conservatively stacking their stops under these moving averages. So if the price then were to come back and spike through, maybe close below one of these moving averages, then what you have in essence is stop losses being taken out of the market. And when stop losses are taken out of the market, then we often see a potential trend reversal coming into the market. It's something similar to what we've seen here, and again here. And again, this will keep happening. So it's an ongoing pattern. So, you can use this. Obviously, you can't use this as an only way of placing a trade. I mean, you need many other factors as well, which we discussed in things like Trades Toolbox, Trades Basecamp, the number of factors you require to build a trading strategy. But what we would say is that certainly here, you start to take components about what we're speaking about and maybe integrate them into trading strategies that you're already looking at. So that's good. That's two different ways in which you can use the moving averages. I really hope that you have taken good value from that, and it's going to help your trading journey. Definitely leave us some comments in the chat below. Let us know if there are any topics in particular that you'd like to cover. But other than that, that's pretty much it in terms of my topic for the week. In terms of an update of trading opportunities, as you know, those of you that have been following us for some time, we don't trade the market in August, so we're not actively placing trades across the market. However, we are continuing to run our live trading room, which is ongoing and giving opportunities out as we go along. So this week, just two of the opportunities that we have taken, one of which is currently we're running the market short on the pound US dollar. We entered the market short yesterday based on a Money Bars 2.0 trade opportunity here. So we're on a little bit of profit here at this time. And tonight we'll look to set the target. So for Sunday evening, we'll place our target based on the distance that this primary bar does move. So be on the lookout for that in live trading room Sunday evening. We're going to place the target for this. But we are short on the pound dollar, and we're also short on the Aussie dollar as well. So Aussie dollar we actually shorted 2 days ago, and we short this on the close. So right now you can see we are in a little bit of loss here on this Aussie dollar. It's moved just a little bit against us at this time. Our stop loss is still very much on the high of this bar. And again, we'll look to set our target on the trading room after we get a breakout of this insider bar. So let's look to see how that all pans out from there. And we will take it all from there. That's the update in terms of trades that we're running this week. For those of you monitoring the other markets such as silver and things like that, you're seeing some really sizable moves in those particular markets. Something that I've been speaking about recently as well a lot is the Brent crude oil chart, which you can see actually the green line that I had in, it did actually go and close this gap. So for those of you that trade gap closing strategies, you will have been able to benefit from that. The market did go and close that gap on that bar just there after a long time. And obviously what we're looking for now in the trading room is a new confirmed high, so we can get involved with cash in 4.0. Some of the other markets, Bitcoin rising quite nicely, but again, be aware of the gap that has formed here as well. Remember, the market does like to close gaps. Bitcoin is no exception to that. So there is a gap that's formulated at 9,600 just there, and I suspect at some stage Bitcoin will look to close that. Silver as well, just here, you can see that silver is very much on the rise as well, quite aggressively this week, has made quite a large gain. And again, no gaps on the silver market that haven't already been filled. So that is an important thing to note just there. So these markets, especially silver, gold, really on the rise at the moment. So aggressive trends, maybe not so ideal for trading, but for investing certainly. If you're buying silver and things like that right now, that looks like a good chart at the moment, doesn't it? So that's pretty much it from us for the market update. I look forward to speaking to you all very, very soon. Until the next time, stay disciplined, follow your trading plan, keep trading like a master. Bye for now.